We've got a rare Bitcoin macro signal appearing early. Here's how to position ahead of it. Hey guys, it's Keith Allen. It's Friday. That's Friday with a little celebration for it because we made it through another week. And it's been a tough week for a lot of traders. I hope it's been a little bit easier for you. I hope that you have been paying attention to the analysis and that has helped guide you a bit and at least protect you from getting wrecked. Oh, yes. Oh, yes. Hearing from lots of members of our Telegram community who are appreciative and grateful for the insights that they've been getting. And I hope that you have been taking advantage of that as well. If you haven't, I encourage you to join our Telegram communities because we're in there each and every day talking about it, trying to figure it out, and lending and sharing insights. So links to that are in the description of the video down below. And you can also find them, of course, on the homepage of Material Indicators. You can find them on the Material Indicators profile page on X and on YouTube, et cetera, et cetera. You don't have a hard time finding it. And if you do, just DM me and I'll send you the link. How about that? If you're new to the stream, welcome. My name is Keith Allen. I am a full-time trader. I'm a work-from-home dad. I am co-founder of Material Indicators. And today we're going to talk about this rare Bitcoin macro signal that, quite honestly, I don't think I've ever spotted it as early as this, and it hasn't happened very often. And the fact that the market is doing everything that it possibly can right now to shake out retail traders means this is a really good time to pick up this signal because, well, to put it in simple terms, understanding this and preparing for it can save your ass. Not only that, it can set you up to really be well positioned for what's to come. So, the shakeout stuff, that's pretty evident, right? I mean, I'm going to go ahead and share a chart and we can talk about that. And then we're going to get into what this rare signal is, what it means, what has happened historically, what the invalidations might be, and what the targets could be in both directions. And, I'll show you how I'm preparing for it. Of course, I don't give you any advice. I share insights, I share data, and I let you do what that information as you wish. I will show you what I'm doing. Take that for what it's worth. So let's go ahead and get let's get a screen up here. Let's see. Oh, I was talking about this market trying to shake everybody out, and we're seeing these crazy round trips of the range over and over again. And it is just wearing people down and shaking people out because that's what this market does. By the way, if I haven't mentioned, live chat is open. And if you'd like to join me, I'd love to have you because that's what we're here for. Hey, John, good to have you with me. I appreciate you and everybody else who joins me on the stream here. So check this out. As you can see, I have this chart up and I've got a pattern built here. Triangle. This extends. This could, I could have really just made this like, more of a symmetrical triangle, but I like to extend it as long as the trend will go. And it didn't quite go to the all-time high perfectly. That's kind of a different trend line. I tightened it up here for the purposes of understanding where we've been since October, right? Since things really got nasty in October. I mean, technically, they really got nasty right up here after the all-time high on October 10th. But I'll show you what that looks like. Let me clear out. I'm going to take timescapes out here and just try and clean this chart up a little bit so that we're really focusing on this pattern that I'm trying to share with you. So yeah, I could build this differently with a trend line that extends from here from the all-time high, and it would be very similar. It might give us a little bit, maybe even a little bit more realistic perspective. But what I like to do when I'm drawing these trend lines is not just draw from candles because wicks can be misleading. I like to draw my geometry on the chart using a line chart. And that kind of eliminates, that eliminates the wicks and gives us a little bit different look here. So you'll see I'm, here at the top, all-time high, went to the next touch point. And if you're following the rules of basic technical analysis, that's kind of how this works. We can go refine this a little bit here on a 4-hour chart if we want to. And this would give us something that looks more like this, and clean this up just a little bit up here. And with that, we haven't really had a breakout yet. And that might be more characteristic of what's happening. But either way, we have these other technical indicators here that are giving us plenty of clues to understand where the support and resistance are. So let me go ahead and switch us back to a candle chart. And I can, oh, I see that my image is not mirrored. Maybe that would help next time. And it looks like I'm looking at the screen. Sorry for looking away. I'm looking at charts. So what we've got here is a situation where price looks like it broke out of this triangle, but what happened? We ran into resistance. Where did we run into resistance? We ran into, let me go back to the daily chart. We ran into resistance right here at this yearly timescape, the yearly open. And I had the yearly open marked here, but it is technically, it's a timescape level here, as you can see. And so this is strong resistance, strong technical resistance, and we have been rejected now several times here since losing it, right? We lost it for the first time in this iteration. We lost it initially on November 15th with a wick. Then we had a further breakdown here on the 16th. Oh, that was my anniversary. How nice. Lost it here, lost it on the 17th again, tested it on the 18th, failed test on the 19th, failed test on the 20th, and then a bigger breakdown. We came back and tested it here on November 28th. A couple of failed attempts, rejection at the 21-day moving average, and then failed test on December 3rd, failed test on December 4th, failed test on December 5th, another attempt on December 9th, 10th, 11th, all fake out and fail, fake out and fail, fake out and fail. Today, we didn't even get the fake out, we got the fail. And where did support land? Support landed with a brief fake out with a wick past the 21-day moving average. Interestingly, it is here on this trend line, which gives it a little bit of technical merit. But quite frankly, the weakness in that 21, I think, is going to be a problem. Hey, Alex, good to see you, man. Been a while. Appreciate you coming back. Hope things are good. Yona, thank you. Appreciate you guys joining me. And listen, if you guys have questions, I'll do my best to answer them. If you have insight, by all means, please share them. That's how we roll around here. So back to what I was talking about here. We have this 21 moving average here, right? So we see this happening here. And this chart actually in the lower time frame doesn't look horrible, just because we see the 21 moving average rolling upward a little bit, and we have support here. The question is, do you really have confidence in that support? And before you answer that, I'm going to show you some things that might influence your decision. So one thing we know is that moving averages are lagging indicators, and that low time frames are more volatile than high time frames, and low time frames are less consistent to predict than higher time frames, right? So you have higher probabilities with your outcomes with higher time frames than you do with lower time frames. So at the moment, after a downtrend which began, we started really back in August with a downtrend, and then we had a recovery, a new all-time high on October 6th, and then we started to see, again, this is a lagging indicator, so a few days after that all-time high, we started to see that green 21-day moving average start to roll downward. And I'm going to take out the timescapes to make it easier to see this stuff. Okay, so we started to see it roll downward, and every once in a while it would level out a little bit, but then it continued downward and downward and downward. And that's happened since that date, right? And so really it started to get amplified a bit on October 10th, right? This is an infamous dump day. So since then, we haven't really had any upticks in that shorter term trend. And we're seeing one for the first time now based on this move here from our local low around 80,500. And Bitcoin has staged a decent recovery since this dip, but it's losing strength. And there's evidence that it's losing strength because it just can't seem to break this yearly open. Doesn't mean it won't, doesn't mean it can't ever, just means it hasn't. But just the fact that we've had this recovery from down here in 80.5K, and this is now a what? If we go to the peak where it's a 17% bounce, which is respectable. Some might call it a bear market rally. Some might call it an exit rally. Some might call it you can call it whatever the fuck you want. I don't care. The truth of the matter is we've got lots of bear market conditions that say that this is not a bullish recovery. It could develop into one, and this could be an indication that would be happening on a low time frame. However, remember what I just said about lower time frames versus higher time frames. Now let's switch over to, and for this to really turn into something good, you would want to see this continue, and you would want to see this golden cross, which is the unwinding of the moving averages. Notice they're all wound. The purple 200 up here on top, the blue 100, the red 50, the green 21. They're all completely death crossed. So you would want to see a recovery. You would want to see, obviously, price moving above the yearly open, dragging that moving average up, and then golden crossing. That's the unwind between the lower moving average and the higher moving average. So the green would cross over the red 50, and the blue 100, the purple 200, and then everything else would eventually unwind as well. That is the bullish scenario. And in terms of a bullish recovery on the higher time frame, you want to see obviously price over this yearly open. That's the first threshold. And then you want to see price over this 50-week moving average. And along with that price over the 50-week moving average, you would want to see this weekly RSI above this 41 range. And you can see that we did have a little recovery here on the RSI before it too went flat. And this moves in real time, so you want to keep an eye on this, right? But it's not. There have been times where it has been right up here around this 41.5, even nosed above it briefly, but it always retreats, or it has thus far. And if you look at this in history, if you haven't seen this yet, if you look at it over time, you'll see that every time that Bitcoin has been trading in this range below the weekly RSI at 41, we're in a bear market. And so we have some validations that we're in a bear market. And those validations, if anybody's missed them, were the death cross of all the moving averages, the loss of the 50-week moving average here, and the loss of the RSI. So those are all things that confirmed a bear market for me after the November close. And so now this pattern that I'm talking about, this hidden pattern that I've never noticed this early, is one that is developing. And bear with me if you will. I'm going to take this guy out here. Let's clean this up. What do you notice here of these moving averages? What I notice is, and I'm going to go just to that Bitcoin chart. What I notice is what appears to be, I mean, if we have a miraculous recovery, this might not be imminent, but it sure feels imminent from here. So let me just do something. Let's take, we're just going to do a little bit of artwork here. Let's just take this and this. So this isn't dead nuts accurate because it doesn't show any change in the trajectory of the moving averages. It just, if we stayed on the trajectory that we're on right now. pretty much, right? And that's not perfect, but it's close enough to the pin. And I'll even make this one red so it looks like the red 50. Okay. And so I'm just extending this out a bit into, let's go into next month, about a month out. And now let's do the, I know I just changed your color, bro. Oh, I changed the text. I want to change the line. There we go. So let's say that's the red 50 extended out. Now let's take the green 21 week moving average and do the same thing. And let's just take this on a similar trajectory like so. And chances are this is going to change, right? But this is just modeling. This is just some very rough modeling to try and forecast a date of inflection. And what we see here is we see a cross literally about a month out from now. I think of the analysis I wrote 3 or 4 weeks. Looking at it now, maybe it's 5 weeks. Again, depending on how these move from here, this is a very rough model. Nonetheless, it looks to me like a death cross of these moving averages is imminent unless Bitcoin can miraculously, pump through sustainably and pull this 21 moving average out of this nosedive. And if we look through history at all the times that this has happened, this has been another, I say it's another validator of a bear market, but quite frankly, we've validated that. So if you're not in that camp yet, that's okay. That's up to you. You don't have to be. You do you. I'm telling you, my take on things is that we're in a confirmed bear market until proven otherwise. But if you're not on board with that, that's fine. But let me just show you what happens each time this move has happened. And my reason for doing this isn't to create FUD or hysteria. It is to help you prepare, because if you can see this on the, this far in advance, you can prepare for it. And you prepare for, I'll show you what I'm doing. You do what, again, you do you. So let's go back in history. This has only happened a handful of times. The first time was back in 2014. The green 21 and the red 50. Look what happened. Big, fat dump and a slow grinder. Okay, that's 75% from the point of impact. That doesn't mean that this one will be 75%. I'm just telling you it is an accelerator of the trend. And the reason it's an accelerator of the trend, because these are indeed lagging indicators. In my opinion, the reason these accelerate the trend is because, number one, people believe in them. People who say, "Oh, technical analysis doesn't really work. It only works because people believe in it. So many people believe in it." Well, then it works, right? Because there's so much sentiment around what these do. And also because there are so many algo bots in the crypto sphere that when key moves like this happen, then those bots react as they are programmed and they sell. In most cases, right? If it's a long bot. So this is one instance where we had that death cross, the green 21 under the red 50, and boom, the rest is history. Now, here's an instance where it was a bit different. This was the recovery. This is the golden cross. Okay. This is the recovery. This is what you want to see. And this is your sign that the bull is back. Okay. The good news is this led to the bottom. Now let's find the next instance. Okay. Here's another one. The green 21 and the red 50. Similar set of circumstances. This one bounced off the 200-day moving average, as did this one, right? The 200 Bitcoin wasn't alive, for, excuse me, 200 week. Bitcoin wasn't alive for 200 weeks at this point when it found this bottom. But that is where it found support. Um, that's a that's a clue for you right there. Um, so now and Ninja the chart. I see your question. I'll get to you. I'll get to you in when I finish this thought. Um, so how deep does this one go? We're going to go from the point of inflection. See if there's any pattern here. That one was 60%. That doesn't mean that this one's going to be 60%. Just means it's a continuation of the trend and an amplification of the trend. That now, again, you see the golden cross occurs, price recovers. All right. This was COVID. This was a bit of an anomaly. It was indeed a crash, right? And it was indeed a death cross right here. And that one went 55%. Doesn't mean that this time is going to be 55%. Just means further, it's just another example of what has happened historically. And quite honestly, had we not had COVID, I don't think this would have occurred at all. I think there would have been a continuation of this trend and we wouldn't have had this dump. Like I said, this was an anomaly. Again, the 200-week moving average served as the backstop. We got the golden cross right here, and then boom, bull market was on. We had a near miss here in 2021, but later in 2022, we saw the same thing. And if we go to the point of impact or inflection, this was a 66% dump. Now, what was different about this one? For the first time in Bitcoin's history, the 200-week moving average didn't hold. And this took us deeper. This got some help from the FTX debacle and a full black swan event. Again, the recovery, the golden cross between the 21 and the 50, and we're back in business, right? So I can't show you any more evidence of what happens when this particular pattern forms because there isn't anymore. So, you might say, well, 4 times, that's not really a great sample, is it? Maybe not. Good enough for me. Might not be good enough for you, but it's good enough for me because it is historically accurate and it makes logical sense with everything that we've seen and everything we know about technical analysis and death crosses. Okay. So by knowing this now, by knowing this 3, 4, 5 weeks in advance, you have the rare opportunity to prepare. And what does that mean? So what do you do? Well, again, you do you. I'll tell you what I'm doing. What I'm doing is because I have 2 strategies at play here. One is my long-term investment strategy, and the other is my trading strategy. In my long-term investment strategy, I've been building a position since all the way back at this FTX crash in 2022. Great. I have a great entry. But I don't want to give it all back. And not only that, more importantly than that, I want to be able to accumulate more Bitcoin. And if I just hold it and ride it from top to bottom, and that's fine, if that's your strategy, I think in the long term that will pay off, but that will not help me accumulate more Bitcoin. It will just help me wait it out patiently, not be stressed, which is good. And when Bitcoin does finally make new all-time highs, I'll be, celebrating once again. But I do not want to give up everything that I've built. So what I'm doing is I'm trimming my position, and I've already started trimming my position. I took profits all along the way up, and most especially above the 100K level, right? In this 100 to 126 range. I took a little around the 120s. I took a little, and quite honestly, I bought some up here. I sold everything that I purchased above 75K so far. And now my next rung below that is in the 65K range in terms of my entries. And so I'm trimming that up a little bit now too. So I'm dialing my position back, de-risking, call it what you want. And I do everything on spot. There's no leverage, there's no futures. This is physical Bitcoin. And this is a position I'm trimming back. I've now trimmed back. I mean, I told you guys a couple weeks ago I had trimmed about 22, 23%. And now I've trimmed closer to 33%. And if I get the right pumps, I'm going to trim it as much as 50%. And what I'm looking for to do that, because I do think that it's still in the cards, although this weakness here around this yearly open timescape is not making me happy. But I think that there's enough hopium in the market still. Well, maybe not for people listening to the stream. This is where the smart people are. But there's enough hopium in the market that all of the hype that we hear from the Michael Saylors and the Tom Lees, and Tom Lee I respect, but he has turned into a bit of a hype man since he started this deal with Bitmine and the ETH treasury. I don't think that those targets are necessarily realistic in the near term. I think that their targets might be realistic for the long term, but to say that we're going to see a new all-time high by the end of the year, to me, is not realistic. To say that it's going to happen even in first quarter, hey, it's possible, and I'm certainly willing to change my outlook when I get the validation that that's happened. But so far, it's not happened, and I wait for those confirmations, and I trade what's in front of me, and I'm tuning out those narratives because those narratives can mislead you. If we all traded narratives and only narratives, then we would say, well, gosh, the fundamentals are phenomenal. The outlook is great. The Fed is cutting rates, and the Fed is now moving towards some form of indirect QE. Whether it's direct, whether it's indirect, it's still injecting liquidity into the market, and it's still going to have that effect. And then there's the talk about the fact that next year we have midterm elections, and that Trump will want to make sure that the market is doing well for midterm elections. Well, those things are all true, but guess what? Price does not give a shit. The charts do not hear those narratives, or the noise. So I trade the charts because the charts, unlike the politicians, don't lie. So that's where I'm at. What I would love to see, what I would really love to see, is a pump to test resistance at the 50-week moving average, which currently sits around 102K, and a rejection. Quite frankly, that's what I'm expecting. And if this happens, I would be in distribution mode all the way up. I'm not going to hold out and wait. Right? I've sold some here recently, and I sold some, all in this range. So that's the other thing. As a trader, I'm not being greedy at this point. As a trader, I'm going to take those quick wins and get in and get out, because I'm trying to stack more powder so that when Bitcoin does pull back, when we do have that death cross and we do see another major dump and watch Bitcoin price grind down to a bottom around potentially that 200-week moving average, which currently that's around 56. Let me tell you what's interesting to me about this. And of course, over time, all of these are going to move. But what's interesting to me about this, number one, there's a history of this serving as a backstop. Not every time, but most times. And number two, we have this double bottom here. May not look like a double bottom to you here on this candle chart, but I showed you why we go to those line charts from time to time. On the line chart, it is a beautiful double bottom. Oh, where'd it go? Oh, right here. On the line chart, it's a perfect double bottom. So that's another reason I like the line chart when I'm drawing my geometry on the chart. So These death crosses have a history of finding bottoms like this, and double bottoms are a great way, are a great place to identify as a target. The fact that this one is near in the near range of a brief consolidation period that we had here in the 50 to 52 range, and in the range of the 200-week moving average, all make that interesting to me. Doesn't mean that's necessarily going to be the spot, but certainly a spot to pay attention to in the market. Now, you could say, hey, this market likes to overshoot. And it's, if we get down this low, maybe it's going to go threaten the 50K level. Entirely possible. And that's why I have another target, which is down here at that prior consolidation range. I think we have one in the 40s, right? Oh, here's the 50 to 52K range. And then the next range is 40 to 45K. So these are all these prior consolidation ranges are viable targets to me. Again, you got to do you. This is what works for me. So that's kind of what I'm thinking here. In terms of liquidity, that's a good signal to watch. Watch for that liquidity to reappear in the order book. The fact that we're seeing some volatility right now is a function of the fact that there is not a lot of liquidity in the order book. Here's a look at fire charts, and you can see when liquidity appears, that serves as support or resistance, depending on where it is, for price action. And you can see we double topped up here around this 94K level. That level has been filled at this point, but this last attempt didn't quite make it up there, did it? That's a sign of weakness because you have lower high. And now we're watching for the next move. Is it going to be a lower low? And so far, since we hit that local bottom at 80.5K, we have not seen a lower low. So this is one you're going to want to watch for as we have this battle here in this range around the timescape levels and around this moving average. Look, here we are again testing the 21-day moving average. And if we lose this, right, here's the next support level is the trend line on this move right here. And as you just saw, perhaps on the weekly time frame, there's a 100-week moving average down here around 84. And if you lose that, guess what? It gets real ugly. Let's put timescapes back on and see where there might be some targets down there, because there's a lot of darkness in between. And then we start talking about that we sub 80K range and the 2021 top, which to me has a lot of value to it. This would only be stronger to me if there was a moving average stacked here or a timescape level. There won't be a new timescape level there because once these are set, they're set in stone, right? So we could see a new one form there, but nothing old will move. These lock in at the instant that they are set. But over time, we could certainly see either the blue 100 draw down to this level, or we could see the purple 200 draw up to this level and provide additional strength around this level, which would make it a very attractive target to me. Right now, all of my conviction for this level is based on the fact that we spent so much time consolidating here. Obviously, it was the all-time high, and it was a resistance point for years since 2021. But after we first approached it here in 2024, we spent months and months and months and months in this range before actually breaking it on the Trump pump. So there's that. Now let's see if I get some of these questions, guys. I thank you for your patience and I thank you for your participation. So, Ninja the chart, how do I see the weekly downtrend losing strength? Right? Nope. Wow, that's easy for me to say. The downtrend seems to be gaining momentum at this point. A bit of an inflection point, and here's the misleading part, right? And that's what I led with. The market's trying to shake people out, trying to confuse us. You see strength at the support of the 21-day moving average. But notice it keeps wicking through the bottom, keeps wicking through the bottom. So the strength is limited at best. Um, that's a sign of weakening strength. That's one. Two, you can see that the higher time frames, uh, it doesn't look as strong, right? Essentially, these doji candles are indecisive. That's not a sign of strength. Another sign of weakness is the fact that there's been failure to break this 2025 open, this timescape level. So it's mixed, right? By one in one sense, you look at the daily and you go, well, the 21 is starting to nose up a little bit, and we have a series of higher lows. Those are positives. Those are indeed bullish. Bullish signs short term. But the failure to get a clean candle above the 21 and the failure to make a clean break above the 2025 timescape make this, in my opinion, almost a no trade zone. I mean, there's really not a lot of room here for a trade, in my opinion. You know, 3% for a quick scalp if you have a tight stop, but chances are that stop's going to get flushed. So I don't like this zone at all. Not one bit. And to look for my next trade, you know what I'm going to do? I'm not going to chance it. I'm going to go and use the tools that we have for this. I have the MTF mean reversion indicator, which actually just gave us a signal here. This might be, let's see. Okay, so this is kind of in scalp mode right here. Dollar cost average my way into these with very small positions. My bot takes care of this for me. You can do this manually as well. And if you're doing it manually, a good way to do it is to look at these signals and then compare the liquidity in that range before you take the signal. And so by pairing this up with fire charts, we can see, for example, we just got a signal here at what, like 90, just above 90K. And if we go to fire charts, we can see that we have a little bit of support here, right? I'll build some contrast in here so you can see a little bit better. We do have a little bit of support here, and we do have thin liquidity to the upside. So there is a chance of a bounce. But you would want to see some buying to go with that bounce, and you have a little. So taking this into the daily time frame here, we get more granular. We can see if price can clear this and 92.70, that's where the signal was, right? This is exactly where the signal came. So if we can clear this, then there's room for a quick scalp, but there's not a lot of upside. There's not a lot of room before you run into resistance. You're going to start to hit resistance at 92.5, and then it gets denser at 93.5. So I would be very cautious about trading in this zone right here. That's just me. Again, you do you. Hope that answered your question, Ninja the Chart. If not, please clarify. Alex, do I think bid liquidity is enough to hold the price in the 80K range? I think, well, that's a good question. And here's what my thought is. My thought is, at the moment, there is some decent liquidity in this range. Let's see what this looks like without the filters. Okay. So here's the color scaling here, right? You can see white is the highest number on the chart. We actually had some of that right here where, that was 33 million in volume, which is a decent amount, but not a huge amount. We had this nice ladder here, and this was, like 6 to 10 million every rung of this ladder. There's 16 million there. There's 6 million, million and a half, 6 million, 6.5, 10 million, et cetera. So this stacks nicely, but this was pulled. This was a rug pull. This was a institutional rug pull right here. Um, so this is thinned out, right? So there's rungs here that are in place. Let me refresh this guy. There are rungs of this that are in place that are good, and I would say that as a simple rule, you look for the brighter spots on the chart, right? The brighter side equals more volume, and that is the dominant side. So if we were to flush to 85K right now, based on what's in the order book at the moment, I think there would be some support. There's 26.5 million sitting right at that level, and there's another 19 million below that, and another, what is it? It's like so small, I'm not hitting it. Another 22 at 81 million, and another uh 23 million at 80 million. So there's some decent liquidity down here, but I'm not sure I got a whole lot of confidence in it at this point. Because I think that the macro, like we could get a short-term bounce from here, and I think that we would. But I think that's going to be another fake out that grinds us down to one of these targets. Why do I think that? Well, what's the viability of that target at 85, for example? There's no timescape here. There is. Do we have a moving average on the higher time frame, perhaps, that gives us some hopium for that target? So we do have a blue 100 moving average. So this would lend some support to the idea, and also give us some justification for why there's any actual liquidity stack there. Maybe trying to protect that level. So this gives me some reason to believe it would hold in the short term at the very least, give us a bounce, and then you have to see how things develop from there. Longer term, yeah, I like that there's a weekly moving average there, and we would just have to see what happens at that time and see how, what the conditions are when price gets there. Excuse me. I think in my heart of hearts that we'll probably see a deeper correction from that if we go to the all-time high right now, and we look at what kind of dump we would see just to get to that level. That's 50% from the all-time high. That's respectable, right? There's no, it's actually even more than that if we go to that current wick. But this would basically indicate that if price held from there, that would basically say that this is the shortest bear market in the history of crypto, and and we would have a recovery from there. But if we look at where we would be from that next pending death cross that we talked about at the beginning of this stream, that would be only a 20% drawdown from something that, all the other priors have been 66%, 55%, 61%, 75%. Again, not saying that we have to go 50, 60, 75%, just saying that 20% seems like it would be a gift at this point. So, and if we were to go to those bigger ranges, what would 75% from the all-time high look like from here? That would be around this 71 level. Around this is the second quarter of the year, Q2 timescape of 2024. And it just so happens that there's a 2025 timescape up here too. And this gets us dangerously close to that level where we had had that yearly open. So again, I don't think this is enough based on prior bear markets. Yes, this time might be different, blah, blah, blah. Noise, noise, noise. Again, we just have to watch the charts and see how things develop from there. At this stage, again, I like that there's a 100-day moving average right here at the same level that we have this bid ladder stacking. I'd feel a lot better if there was more in the middle here. If there was more, if we had more bid liquidity filling in these gaps, because there's very little in between right? From 84 million down to 81 million. There's very little holding that up. So if you fall through this, it's going to be a free fall down to 81. Um, Smiley the barber. Smiley, I need a haircut. So if you're close by, maybe in Miami, give me a shout because I need a little off the top. Um, so what are my thoughts on current price? Do I think we can see 92? Well, let's go back to that daily. Oh, I need a refresh. Um, well, based on what we're seeing here, let me go back to the daily time frame. Based on what we're seeing here at the moment, we have thin liquidity to the upside. So it's really only this level that we're at right now, $7 million holding it down here on Binance, and a mixture of buying and selling. The whale, purple whales, is the one I'm most interested in, and I mean their last order was a small sell order, but they are still trending upwards overall here. So yes, I think it's entirely possible that we make it up there. Hey, maybe not today, but over this weekend, and this is again, the market's trying to shake people out, and so there's no guarantees, but this weekend is likely. When you get liquidity on both sides, it can pin price down and dampen the volatility. But I think this market is looking to, pardon my French, fuck some people up, and so you might get your 92, and if you do, I'd take the money and run. And you know why? Look at this right here. See this ask wall, and it's not much of a wall. 6 million bucks. They just pared it down, and they moved a couple million down here, and so they're pushing. This is designed to suppress price. Like they didn't move this down because they all of a sudden decided that they don't want to sell at 93. They want to push price down. I think that this entity that added this liquidity here, and look, it looks like it came from up here. Look, they're stepping down and stepping down. Um, I think they are trying to push price down into their bids, and then they'll let it rise back up. That's what my thought is. So I like that there's a pocket of bid liquidity down here. We could see that 89 level before we see a recovery. And you just have to watch out for icebergs coming in and putting the hammer down and pushing price down further. But 92 seems like there's a decent probability that we could hit that. That's not advice. That's just opinion. Okay. Hope that has helped you guys out, given you some insight. There's a lot. There's a lot to come, and I would say that this market participants are notoriously impatient. Do not be a victim of your own impatience. Do not be a victim of FOMO and FUD. Do not be a victim of listening to narratives that are not currently moving in the direction you think that they are, or you think price should be. The fact that price is moving against the overly bullish narratives should be enough of an indication to you that maybe following narratives in the short term is not a great way to trade. Took me a long time to realize that. I'm literally trying to train myself and build the muscle memory not to keep relying on the narratives and to let go and focus narrowly on the charts and data, because that's given me what I need to see. And I will leave you with the parting remark. This right here, my friends, is early fucking alpha. All right. This seems imminent to me. There is a chance, very slight chance, that it doesn't play out, but there is a high probability that this plays out. And after the first of the year, we see a dump. Does that mean we can't get a test of resistance at the 50-week moving average before that happens? It does not. Okay. That could absolutely happen. I would love to see that happen. I would be cashing in some chips if that happens. Um, and if it doesn't, guess what? I will, if we lose these levels, I will lighten my load more before we cascade down. Because once you get to here, it's too late. We could chop, we could fake out, we could wick, but for this to be sustainable, you need to see weekly closes above the 50-week moving average and the weekly RSI above 41, the 41 range. And until that happens, these are bear market conditions, and I am going to trade it that way. I'll do me, you do you. Going to leave it with that for this weekend. Hope you have a fantastic weekend. Do something you love with the people you love. And, it might not be a bad idea to back away from charts for a minute and come back fresh because based on on the liquidity that we're seeing in the order book right now, I don't think you're going to see crazy volatility unless there's major rug pulls, at least not until Sunday around the weekly close. So go enjoy the season and come back fresh on Monday. Just a reminder to anybody who's interested, if you're interested in any of these tools, Material Indicators having a phenomenal, huge holiday sale, 33% off every plan, and a brand new, for the first time ever, 3-month Premium Plus plans. You used to have to subscribe for a full year. We're probably going to go back to that. But in the meantime, right now during the sale, you can get Premium Plus. That's all these tools I'm showing you and a whole lot more for 33% off. And you can take advantage of that 3-month Premium Plus plan if you want and get your nose into this. Here's the best part. You got 14-day risk-free money-back guarantee. If this does not help you trade smarter, you contact me and I will give you your money back. Simple as that. No bullshit. Have a great weekend. Let's keep trading smarter together.